Okay, everyone, I'm going to do a closing stock market wrap video. This channel is all about technical analysis and trade ideas. Again, I'm not going to just read off the headlines and talk about, oh, the market's falling. Here's why, because the headline this and headline that, and here's why you guys all lost money. No, that does nobody any good. So my analysis is to forecast where the price is going to go in the future, where the probabilities lie. We look at levels to watch. And basically, I've tried to give you guys trade setups for where the price will likely head in the future. I get a lot of them right. I don't get them all right. And again, we have to manage our risk, so that's kind of part of it. If you guys find value in the content, drop me a thumbs up. I do appreciate that. Please help my channel grow. I'm putting in the time to give you guys these trades, these stock picks. Yesterday, I gave you Walmart. The thing's down, 17% or so from basically yesterday. And again, I'm putting in the time to review the charts and then give you guys everything, my full analysis. So drop me a thumbs up. And then again, if you're interested in learning this as a skill set, you won't be disappointed. Check out my stock market technical analysis course, link in the description below. It's going to help you build your skill set, and you're going to be able to pick up on these trade setups and what I'm talking about in these videos a lot quicker. And then you're also going to be able to react faster. Okay. That's the one thing that I'm not going to be able to help you guys do is react, pivot on a dime, okay? I can point out levels. I can kind of point out the charts. I can point out trade ideas. But when the opportunity shows up or when it's time to change position or pivot, I can't get a video out quick enough oftentimes. So that is that's where, that's your responsibility to learn the skill set, okay? So I can give you a hand. I can give you a heads up. I can give you, I can give you a head start on learning this skill set through my course. Check it out if you're interested. Link in the description below. Triple Qs. So let's look at the tech sector. I always start off where we ended. All right. So we had a big reversal today. Let's look at the daily chart. You can see just big bearish engulfing candle. This is a bearish engulfing right here, today's price action, because we gap down basically. So it pretty much just, the gap down engulfs just all the previous days. So very impulsive selling price action. So what am I looking for now? All right. When I look at the hourly, I see there was this little minor gap right here. We did fill the gap. We closed just below it. Maybe the market wants to rally here, I wouldn't give it too much room though, but maybe it wants to rally because we did fill the gap. I'm not exactly sure. I feel like it's probably going lower because here's the thing. We're starting to see the breakdowns in the safe haven stocks, the safety stocks, the areas where all the retail traders have been hiding out. Again, a lot of the retail traders have bailed on the tech stocks because a lot of them lost a lot of money. Let's be honest. When you look at things like ARK, and this is those tech stocks that all the retail people were plowed into. Well, all right, it's not the fact that the retail just, maybe rode this thing down. They've been buying the dip the whole time, all right? They bought this dip, all right? And they bought, they bought this dip, they bought that dip, maybe they bought that dip. They probably stopped buying the dip there and just said, okay, I've got enough, and now I'm a long-term investor, and they're just locked into their losses. But it's not just, they've been buying the dip and taking on losses. That's why bear markets can be so powerful, and that's what fuels the next leg lower. The reason why this continues to go lower is because there's dip buyers that have been stepping in and going long, and then when they figure out they're wrong, they start to exit with losses. Then it creates more selling. So again, just understand that, the retail traders, they got wrecked here basically, probably gave up a lot of their profits, maybe, hopefully not all of them, but definitely gave up a lot. And then they've been hiding out in the stocks in the safe haven dividend payer stocks. I know that's what Kramer on TV has been talking about. Buy good companies that pay dividends, this and that. And I think in general that's relatively wise when it comes to a bear market if you have to go long, because you have to understand Kramer only talks about going long. He only tells people to buy things, and he'll say, and he'll tell you to sell, but he's not going to, most of the time he tries to sell when it moves up. So at the end of the day, the guy's only going to give you advice that works in a bull market. If you're in a bull market, then his advice could work, but everybody's advice works because the markets kind of rise all together for the most part. In a bear market, though, you got to take out these defensive stocks too. And here we go. XLP down 6.5%. Just today wiped out gains for all of 2022. And, we're trading kind of back in the 21 area, December 2021. I closed my short position at the end of the day because we came really close to this support, 71.38. All right, that's some support right there. So I think we probably kind of flag out, and then boom, continue lower. All right, but we'll probably flag out for a few days. Again, we don't have to, but the probability says we'll flag out. The other thing, though, that I want to point out is all these safety stocks, these boring dividend-paying stocks like Walmart. It pays a dividend, but it's just it's paying 1.7% dividend, and it's just in the last 2 days fallen, 17%. So how many years is that? 15 years worth of dividend payments given up in 2 days? So again, you can't buy stocks based on a dividend. That's the point. You can give up all those gains and, just don't buy stocks exactly just for a dividend. Overpriced stocks is an overpriced stock that's likely going to come down. And so again, we're starting to see these safety plays. This is the area that retail's hiding out, starting to get taken out and buried, wheelbarrow and shovel time. They're getting buried. The other one, Costco. All right, this is one I've talked about for quite a while. I've talked about it in my live stream, guys. If you don't know that I do a live stream on Saturday mornings around 9:15 Pacific time, come check it out. We go through all kinds of trade ideas and stocks on those Saturday live streams. But here's Costco again. Bull market in Costco. Broke trend back here, January, early part of January. It's been back testing for, a good part of the year. But again, broke again. We hit the resistance. Boom. Big sell signal. Bearish engulfing candle right there. Okay, that came with some negative divergence. Clearly, big negative divergence that's been building for a while. And down she goes. So people have asked me where I thought Costco was going, and I told them the entire time, I think Costco is going all the way down to this major trend line. If you go to the weekly chart, here it is. This is 2009. This is how far away the market got from its kind of normal pattern. This is what the Fed did. And again, I've said for years that the market has been trading on the Fed, and that's it. Nothing else. The market trades on the Fed. The economy, for the most part, is propped up by the Fed. So if earnings, as soon as the Fed starts pulling away the money and starts pulling away the spending, earnings start collapsing, and you're seeing that in the retail stocks now. So the consumer's money comes from money printing, and that's basically it. So here's Costco, and I think it's going down to the bottom of this trend line. Now, I don't know when it's going to get there. We're probably looking at this. We've got some support, right in here. This was kind of former resistance, so that should be support right about 389. So we might bounce there, but at the end of the day, this is likely going to head down somewhere in here, okay? And that is, from where we're at now, that's a continued drop of another, 25 or so percent. That will be a buying opportunity, most likely down there. Once we hit that trend line, I don't expect, it depends on how we get down there, but if we fall down there pretty quickly, we should have a pretty sharp rally. So it might bounce something like that, and we get a big, strong bear market rally. And again, until this bull market in this stock, which started back in 2009, is broken, we'll just, you can buy at support, all right? And that's it. The Fed most likely will be, if this is down here, you'll probably hear the Fed coming out and talking about easing up on its rate hikes. They'll start easing back, and that's kind of the whole theme that we've been talking about. The Fed wants the markets to do the work for them and come down. They can't really raise interest rates. They've only raised interest rates 0.75%, and yet the market is already selling off. So that's what they're hoping, that the market will continue to sell off and ease up the inflation a little bit. Not nearly as much as they need it to, or as you would like it to, but they'll ease it. It'll come back a little bit. Then they can take a step back and say, okay, we don't have to be as hawkish. And at the end of the day, they never really raised interest rates that high, and the market sold off. The inflation came in a little bit, but didn't go away. So again, your tech stocks, your big mega cap tech stocks, these FANG stocks have just started to sell down. So we should see a lot more downside in these, and that means triple Qs and the market in general will continue to sell off. Looking at Microsoft, your major bull trend is all the way down here, all right, coming off 2009. There it is. So you'll see as I roll up, we've got a long ways to go. Now we have a little bit of support. There's some minor support right there. So a little bit more to go, probably another 6% or so, and we're going to hit this trend line here. You can see we've got a couple reactions, 1, 2, 3 there. So we'll probably generate a bounce once we hit that. That's some decent support. So we might go like this, hit that, bounce up, and then chop around. Finally, once we're going to break, and I do think we will break, but maybe not on the initial tag. But once we break, that should set us up for a continued sell-off all the way down to this trend line. And from where we're at right now, that is a drop of 50%. All right, so we're looking for, from the high to the low, we're looking for this to sell off about 65%. Clear bear market. That's a real bear market, all right, in a stock. Don't think that a bear market is just something that dips and then recovers. A real bear market is something that dips, comes way down and probably holds down here for quite a while. Okay, so this is going to be a multi-year thing. It's not going to happen all at once. But most likely by the time it's all said and done, we're down here, if not even lower. All right, we might even break the trend line, but again, who knows? Apple's just continuing its descent. It just started. This is a weekly chart, so it just started its weekly sell signal last week. All right, we broke trend last week. If I go to the daily chart on Apple, the sell signal for Apple really came right here on May 9th, but it was definitely cemented on May 11th. This candle right here, because they kind of tried to do a recovery and they just failed. This was a clear and obvious sell signal right there. So you sell down, you flag out, you continue lower. So we should continue to head lower. I don't see any signs Apple is not going to move lower in the near future. We've got some support right down here. They'll probably park it here at the end of the week, 138.37. We might break it by the end of the week, but I suspect we're heading lower. And Apple's just started its descent, so I don't see much in the way of support. You've got little levels along the way, so we'll have some rallies. Maybe there's a level at 118, but ultimately we should head down to this 98.29. And as I roll out, really the lower trend line down here is the final target. If you look at the weekly chart, we go to the weekly chart here on Apple. This is 2010, so about 29. This is the bull market. This thing traded in this channel for many, many years until 2020 when the Fed basically went crazy and they pumped the price way up here. So now it's time for this thing to revert back to its mean, which means we should, since we're way over, we should at least at a minimum come down to the bottom of the channel, 67-ish. I don't know when we'll get there, so I don't know what the exact price will be. Maybe it's 75. And then possible that we even break this. If we break this, this is just going to be a much longer, prolonged bear market. All right. So that is something to watch for. For now, I'm just looking for, moves down to the top of the channel, probably get a bounce, and then ultimately moves down to the bottom of the channel. And then, we'll see where we're at. But it's going to take quite a while, but I'm just trying to give you guys the bigger picture. So going back to Qs, looking at the hourly, and then we'll go to the daily as well. The hourly here, this is the hourly chart on Qs. Just pretty impulsive selling today. We had that bearish rising wedge in play. I saw that wedge break in the pre-market hours, and that's when I started to reverse. I took half my profit on my long trade on triple Qs right there in that 305 area yesterday, because that again was one of my resistance levels. So I take profit when I hit resistance. I was looking for higher prices, but again, when we're at resistance, we take profit. And then when we gap down in the futures overnight, and then when the pre-market was open, I started reversing my positions. Okay, so that is what we saw, big sell down today. It should continue. And the point that I really want to make about those safety stocks that everyone's been hiding out in, that should trigger some panic selling. Okay, when there's no safe haven, that should trigger the panic selling. Retail should start to panic, and institutions, if they're positioned wrong, because we're not seeing the put to call ratio really spike or anything. We're not seeing panic capitulation selling. All right, so that tells me that there's a lot more to go. So if we get that panic selling, we should have some pretty big down days. Ultimately, I'm looking for limit lock down days. That's where basically the market halts because it's selling off too much. We came close. I think it's a limit lockdown on the Qs at 7%. Today we were at 5%. So, but if you gap down and then sell down a bunch, you can easily get that limit lockdown days. So if we start to see that kind of stuff, you'll start to see the panic selling. That might signal a near-term bottom. But as of right now, we're not seeing it. And then, so the positions that I've taken, VIXY, the VIX, I think we're going to get a spike in the VIX. And that just goes along with that thesis that I'm looking for that panic selling. So we've got some resistance on this thing right about there at about 2286. We pop that, we should just start to spike up. And we've got levels to watch each way. Here's a level right here. So we'll probably spike up to 3063. You pop that and you're going to get up to, you probably get up to somewhere right in here. Oh, sorry, don't want those fibs. We want to get up to somewhere right in there. And that is at about 4303. Okay, so those are both levels we'll watch. Again, if we get a spike in the VIX, it should come quick. You should see 30-40% up days in the VIX, and especially this thing because it does have leverage. And that's what I'm looking for. So more downside in tech, more downside or upside in the VIX, and the bonds, TLT. I did go long on these bonds today. So TLT, I added back this position. I went long here on this breakout. We saw this breakout coming and caught a good, nice gain there. But then it kind of sold off and it gave us a back test. So there's a back test. It's not perfect, but pretty close. And then today, boom, impulsive buying right there. So we should have more up days in bonds. I'm looking for this TLT to probably rally up to 124.55 as there's a safe haven trade going on where everyone's panicking out of stocks and they're buying bonds, okay, as just a reactive thing. So looking for TLT to continue to rise. I'm long TLT, and we'll look for a rally there as we look for continued selling in the market. Gold relatively strong today, but not enough to really to make a call on it. So we basically been flat the last couple of days. So there's just not much selling. There's just kind of equilibrium. We're just holding here. So that's relative strength because the market is selling off and yet gold is hanging in there. So I need to see a few things, and I need to see gold kind of break to the upside. I need to see like a bullish engulfing candle or something that tells me that this selling is done and we're now going to see that safe haven trade in gold. Don't have it yet, so can't say anything about it. DXY is one reason why gold's not quite rallying. This DXY here on the hourly chart, I've got this trend line marked out. I probably can adjust it slightly, but there on the hourly, you can see it's kind of it's about there. We'll just go like there. And if I go to the daily, it's a little cleaner. And there it is. You can see we basically are holding this trend line. We have negative divergence, so I think we're going to break soon. But again, they hit the trend line today and bounced. So need to see that sell signal in the dollar most likely before gold starts to rally. Okay, Tesla. So Tesla closed the day at support, basically, 739. I think we're going to gap down. I think we're going to gap below this level and really just start to flush out in Tesla. So that's what I got. This is a weekly chart. If I go to the daily, it looks like this. So we hit that support right there. And I got to clean this chart up a little bit. I don't need these anymore. But the point that I want to make is we've hit this level a couple times. It was support here, support again. And look where we're right back at there, hitting it again today. So we could chop around a little bit, but I think it's going to break. All right. I don't, whether it breaks tomorrow, I don't exactly know. But it could, chop around. But it looks to me like it's really going to break. So the level to watch for me right now on this is right there at about 700. We'll call it 700 flat. 700 breaks and gives way. There's really nothing supporting us until we get down to about 557. So it'll probably be a pretty swift move down. And that would be a drop from where we're at now of about 20%. So that can happen in one day. That can happen overnight on a gap down. We're seeing that happen across the board in like stocks like Target and all that. So this thing is probably going to do something like that where it just traps all the bullish money and doesn't give people a nice clean exit. I don't think it's going to just open and break 700 and just sell off. I think it's likely going to gap down in some nasty way, and it could gap big. So we don't exactly know. I am short Tesla right now. I took that position back today. So looking for near term, looking for a gap down to 550. Or it doesn't have to gap. It could sell down, but I'm looking for a move down to that 550 area. Okay, Gamestop. I'm looking to short this thing again, but my broker didn't have any shares to short today, and that's often the case when everyone wants to short it. They just don't have any shares. The way to get this thing is often, at least with my broker, is when it's kind of rallying a little bit, then you can find shares to short. But when it's just selling off, everybody wants to short it. We got earnings coming up, and I think it's probably going to just gap down huge on earnings and just call this thing quits. I wouldn't be surprised if GameStop gaps down all the way down to this 38 level right on earnings. And that would be a drop of about 55%. Can easily do it. I think it's probably going to happen. So keep an eye on that. Again, it's a little bit of a gamble, but this is GameStop. The whole thing's a gamble. So it's all about risk management. Don't put too much into this position. And, you got to put money that you'd be willing to lose. Nvidia. I shorted this one again today. Not the best entry, so it's not a huge position because I didn't get a good entry. Ideally, the best entry, at least in recent times, would have been right here on that almost a back test, but the seller stepped in early. So again, we've got some support right there at 158, and I think that breaks. It doesn't have to break on this next test, but I think it does break, and we head down to the next level, 127. Good support down there. But ultimately, bigger picture, if I look at the weekly, I think this is where Nvidia is going. So this is going back to 2000, almost 20 years, more than 20 years. Nvidia has a bull trend that it's been in. And you can see we've been holding this bull trend, except in the recent years, it's in about 2017, that's it really started to take off based on tax cuts, all kinds of stimulus, and the Bitcoin craze. But we can, I think a lot of that's been, Bitcoin rose in a Fed stimulus environment. So at the end of the day, I think we head back down to the trend line down here, $20, $25, $30. I don't know when it gets there, so I don't know the exact price. But from where we're at now, I don't see us really stopping, and that could be a drop of 80, 90%. All right. Remember, Amazon dropped to 80, 90% in the dot-com bust. This thing can do the same thing. And this thing's propped up basically based on Bitcoin. So if you see a Bitcoin bust, that's likely when this is going to, drop that much. Not to say it's not a good company, but, stocks do what they want to do. We've got some support right here at, I think we're heading down here near term, 126.50. Probably get a rally there and then head down to this trend line, 75-ish. Probably get a rally there. And then at the end of the day, we break that trend line and head straight down to this lower trend line. And good buying opportunity down there if we get it. So we'll just continue to watch that. But again, I am short this one. Okay, PANW. So this one, we had a sell signal back here on May 5th. All right, I had that circled. Go back and watch the video if you want, reference on to what I was talking about back then. But there's your sell signal, down ever since. All right, a little bit of flagging action. We're continuing down. So this should, as far as I can tell, it's a bear flag, and it's just, we're in the continuation phase. The target right now on this bear flag puts us at 420.50. Not too far off of that now. We'll probably hit that tomorrow, maybe even on a gap down. And then we've got this big gap to fill down here at 374.50, and that is where this is likely heading in the short term. I don't think it'll take much to get down there, so look for that to continue the downside. And that's really it, guys. I'm looking for probably a gap down tomorrow. I'm looking for that panic selling now. It should start showing up. We should see the VIX start spiking. We should see limit lockdown days where the market's halting because we're selling off so much. We should see those circuit breakers start firing as everyone, as the margin, basically it's a margin bubble. And as the margin and the margin calls start rolling in, you're going to see a lot of these stocks that have been holding up or are just starting to roll over continue to sell off strongly. So Gamestop should get flushed out. It'll get flushed out in a margin call. Maybe that comes on earnings. Maybe it comes before. But I think likely you're going to see a lot of these people that are holding GameStop get flushed out of their positions with margin calls. And we should see the VIX spike. So if we start seeing the VIX spike, it's going to give us a clue that, okay, we're getting to the end of this leg down. It will feel extremely bearish. Everyone will be very bearish. The headlines will say, oh, there's panic in the streets and nobody's going to want to buy. And here's why you lost so much money. Again, I've been trying to tell you guys in advance, really this whole year, I've been telling you guys that I think we're entering a bear market. A lot of people have second guessed me. A lot of people have told me I've been wrong in the past. So I'm obviously wrong right now. Again, just because you've been wrong in the past doesn't mean you're going to be wrong now. And at the end of the day, if you catch a bear market, you only have to be right on a bear market once, okay? You might be wrong on the start of a bear market a couple times, but if you get it right, you often capture gains that took the bulls years to capture, all right? In triple Qs, we've already given back all of 2021, all of 2022, all of 2021, and we're now into 2020. So over a year and a half's worth of gains have been given back so far in these few months of 2022. And if we continue lower, we're going to continue to give those gains, more of those gains back. So that is what I've been trying to tell you guys the whole year is I think we're entering a bear market. I've been trying to warn in advance before the bear market shows up. It's starting to become obvious to all. And when it becomes obvious to all, we'll see panic selling. We'll see a spike in the VIX. And that's going to indicate to us that, okay, this wave down is probably about finished and we can rally now. We can look for a bear market rally. Something that can last more than just a day or 2 days, all right? Or 4 days. Something that's going to last weeks, months, weeks to months, basically. Bear market rallies can last 6 months. So I'm looking for something like that, but I think we're going to get that panic selling and that flush out first. So that's all I have, guys. Drop me a thumbs up. I'll catch you guys tomorrow.